Hello and welcome to Let's Talk Business. Now, markets ended on a flat note amid volatility. Pharma and energy sectors rose, while realty and media sectors traded lower. Hiral Dadia with the wrap of all the market action.
A volatile session of trade is what we've seen today, where Nifty as well as Sensex ended absolutely flat. If you see in terms of Bank Nifty as well, that has clearly outperformed the benchmark indices in trade. And you had the pharma sector, which was the top gaining sector. Oil and gas also outperformed in today's session. In terms of broader markets, we saw gains of around 0.4% coming in there. So you had the mid-cap as well as the small-cap index, which ended in the positive. Real estate, which has been on an uptrend, actually saw profit booking in today's session. So that was an interesting one to watch out for. From the banking pack, you had HDFC Bank as well as ICICI Bank that were a drag today. In fact, it was the private banking space which was the top gaining sector yesterday, which did see some bit of profit booking that did come in today, and the PSU banking space was the top loser as well. Taking into consideration the other sectors, you had auto, which was down almost 0.2%, and the top losing sector in today's session. Moving on, if you see in terms of the top gainers and Nifty 50, it almost recovered 0.4% from the day's lowest levels, and you had Nifty, which overall ended below the 19,400 mark. Bank Nifty as well saw cuts of nearly 150 points. Sun Pharma, Dr. Reddy's, BPCL, ONGC as well as NTPC were the top gainers, whereas on the losing end you had Bajaj Finance, Hero Motor, Power Grid, ICICI Bank as well as Adani Enterprises. On the back of an earnings reaction, stocks like Newland Laboratories, Trent, Arvind Fashion, Alchem Labs, Rolex Rings, Dhanuka Agri, RR Cables were in focus. In fact, HPCL rebounded in trade on the back of the second quarter profit that actually beat street estimates. Let's quickly look at the newsmakers. KPI Energy on the back of a LOA was up in trade. Cochin Shipyard has approved the stock split, so moves came in there. Alok Industries on the back of a fundraise was in focus. Royal Enfield has actually gone ahead and unveiled its first electric motorcycle concept, and ICICI Prudential was in focus. Volume buzzers, you had names like Greenply Industries, Nykaa, Devyani International, Baji Foods and Tata Elxsi saw some strong volumes in today's session. So clearly, we did see a lot of stock-specific action in trade today, and in terms of broader markets as well, they clearly outperformed the benchmark indices in trade.
All right, now amid these volatile times, where will pockets of value emerge? How will things really pan out for investors in the long term? Pramod Gabbi of Masterless Investment shares his insights.
From a thematic or a sectoral perspective, given the way the markets have run up in the last 3 years, literally from the bottom of COVID, valuation-driven asymmetries seem to be few and far between. There are structural growth opportunities for those growth investors who want to bet on 5-10 years of sustained growth. There, I think the improvements in the macro as well as micro in specific cases will mean that even without any sort of valuation upside, you can generate returns through intrinsic value compounding itself. And that remains the idea in terms of identifying new picks. But I guess given markets are markets, so therefore you will see some sort of a correction or downside, which will make it even more attractive to buy those structural plays.
Now with Diwali round the corner, the markets are gearing up for the new Samvat. At our Samvat 2080 special, we spoke to Kotak Mahindra's AMC's Nilesh Shah and Edelweiss MD and CEO Radhika Gupta about what to expect from the next Samvat.
In Indian market, exit is easy. Between October 21 to June 22, almost $32 billion plus worth of equity was sold by FPIs, and they could take everything out. On the other hand, entry is easy. When they have to buy the same shares or others, they have to pay a premium. So truly, last year was resilience of Indian investors, maturity of Indian investors, and this has done one very, very formidable thing. It has reduced the beta risk of India. It has lowered our beta relative to other emerging markets. That means eventually this will be reflected into the risk premium or return expectations of global investors. So all kudos to mutual fund distributors and retail investors who participated via mutual funds to ensure that last Samvat was good, and I expect this trend to continue in the next Samvat.
I was shooting at Film City yesterday, as some of you know, and in an audience of 50 people, when I asked how many of you had done an SIP, not everybody raised their hand, but everyone knew what an SIP was. And this is Film City and it's a camera crew. And I think that's how much SIP has become popular. I think where we should take heart in an SIP is that if an investor invests in any equity fund in any of the AMCs on this panel or otherwise and stays a 10-year investor, even in a scenario where markets are 0 to 10% kind of flat, the investor makes a meaningful return. SIP has also become a way of saving in a disciplined way for Indian investors. In fact, I always tell new investors, just start a 100 rupee SIP because you will start a format. So SIP solves a problem for investors, one of getting into a savings habit and then of earning a meaningful return on your savings so that you're not questioning yourself on why I invested. My belief is, Alex, that this 16,000 crore SIP book that we have will probably be about double the size, about 35,000 crores 5 years from now, which will be incredible. I mean, DII, domestic ownership of Indian capital markets, is only rising close to 20% now. It was 10% a decade ago. And I think if the SIP movement continues, it will be good for investors and it will be better for capital markets.
Shares of Bajaj Finance gained in trade today after the NBFC decided to raise funds. Now, the company has launched a QIP to raise up to 8,800 crore rupees. Harsh Satya joins in with all the details.
Right, announced in October, being executed now. The fundraise of Bajaj Finance, 10,000 crore of fundraise, all set to go through. What can we expect with regard to valuations here? And let's try and break that down. The book value per share of Bajaj Finance is roughly 1,000 rupees a share, trading at roughly 7.5 times price to book. Now, with this new fundraise, the book value, existing book value per share will go up from 1,000 to 1,130, which is post money and post conversion of Bajaj Finserv's warrants as well. So 1,130 will be the implied book value, which is price to book of 6.7. Let's try and understand better the relevance of this. The 5-year average price to book which Bajaj Finance has carried is 7.5 times, and the COVID low in terms of book value was 5.5 times. So currently at 7.5, which is largely where the 5-year average is as well. But post money, it will be at 6.7 times. So you're seeing a bit of reduction in the price to book, therefore a possibility of upside there as well. Let's quickly switch it over to what this means with regard to ROAs and ROEs. Well, your ROAs and ROEs are trending above the guided range. So what we are seeing therefore is that a little bit of dilution which will come in post this equity raise will easily get absorbed within that guidance band. That will be one thing which investors will look out for. And the other thing is whether they can maintain the 30% plus growth target as well, even though the guidance is below that, roughly 25 to 27% AUM growth. So a couple of those factors yet to play out, but Bajaj Finance in focus on the back of that fundraise.
Paras Defence reported double-digit growth in revenue and EBITDA in the September quarter. Amit Mahajan of Paras Defence shared his guidance and his outlook for the company going forward.
Do you stand by your projection of about a 30-35% growth going forward for this entire financial year, as well as margins? Would you be able to keep them about 26-27%?
Yes, we stand by our growth trajectory of 30-35%, and we also stand by that we will sustain the margins that we did, in terms of percentage. We will sustain the margins like they were last year.
Okay,
if at all, slightly better.
Shares of Baji Foods surged after the firm reported a 47% rise in net profit in the second quarter. Now revenues rose and margins expanded. And how will the company fare in FY24? Baji Foods Manoj Verma shares his views.
Quarter 3 has started off very well, and this was well anticipated as well, because last year it was little early Diwali. So quite a sales got shifted to quarter 2. And this year it's more in quarter three. Quarter three is looking very good. I think overall from industry perspective, if you look at quarter two has not been so great. There were some, headwinds, and what I hear, see, and read the company's results has been a challenging environment. We're very glad and happy that our teams have done very well and they stretched themselves out. We delivered a 17% plus volume growth in stationery, which is commendable and by far ahead of the industry growth. Going forward, as we said that it will be about, say, 17, 18 plus percentage volume growth. I think we are well on track to deliver that.
All right, that's all we have for you, and let's talk business.